Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from LithiumBank Resources Corp. Please note you can submit questions for the company in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Kevin Piepgrass, COO of LithiumBank Resources Corp., which trades on the OTCQX Best Market under the symbol LBNKF, and on the TSX.V under the symbol LBNK. Welcome, Kevin.
Hi, thank you. And thanks for everyone for tuning into this presentation. I hope you enjoy it. So LithiumBank, we are developing the largest portfolio of unconventional direct brine and lithium projects in North America. To start, here's a disclaimer for forward-looking statements. You can download our presentation on our website to have a close look at this if you choose. So firstly, what is an unconventional brine? So LithiumBank, we're focused on these unconventional brines. They are essentially brines that are found in hard rock formations. And in our case, they are in formerly producing oil and gas reservoirs. So they're formation waters, hypersaline formation waters. And we think these are the next generation of where lithium is going to come from, especially in North America. Right now, North America is beholden to mostly Chinese lithium producers, where lithium comes from South America and Argentina and Chile, and of course, hard rock sources in Australia and China. These unconventional brines are abundant in North America. We happen to have two very impressive large-scale brines in our portfolio. These unconventional brines also have the capacity for large production. They're also shorter development timelines, quicker to permit, and probably the most ESG-friendly projects you can find. There's no real permanent physical land footprint. There's no open pit. There's no tailings. There's no massive salars and evaporation ponds. They're pumped from traditional oil and gas methods, and they have a very small surface footprint. So LithiumBank, our summary of how we're developing these assets, how we're basically creating shareholder value. One is scale. Scale is really important for these unconventional brines. We set out to find assets, and we end up staking 4 million acres of lithium brine assets in Alberta and Saskatchewan. Through our exploration, we scaled this down to roughly 2 million acres of assets. These are development assets. We've done the exploration. We've weeded out the formations and the reservoirs that don't have the grade or don't have the capability to produce large-scale brine assets. So we have 2 million acres roughly of producible development assets. These are the Boardwalk and Park Place assets that we'll get to further in the presentation. And with this scale, we see these things ultimately being developed and put into production by either a large-scale miner, a large-scale energy company, or an OEM, because they have the capital, they have the experience and the expertise in developing these projects. So it's our job to de-risk these things. The second part of the de-risking and adding value is the DLE technology. It's no secret the market cap of a lot of these unconventional brine companies are held back a little bit because of the DLE technology. So instead of going out there and creating our own DLE technology from scratch, we hired industry-leading Hatch, who have done feasibility studies and designed multiple lithium brine projects, whether they're salars or unconventional or even the typical spodumene projects. So we worked with them for a couple of years to find which DLE technology to end up partnering with and moving forward with. So with that, we came across Go2 Lithium, or G2L Greenview. We call them Go2 Lithium. And they are, we'll look at them a little bit later on, but essentially we chose them because they're a water processing company. They're an ion exchange company already. And so they have that experience of taking something from lab to pilot to commercial scale production. They've done this before, and water treatment is their business. Next is the experience and our management team. Besides working with industry best like Hatch and Schlumberger and Go2 Lithium, Our management team is steered by Paul Matisic and Rob Shuchuk. Paul, famously known for selling 6 public companies, 2 majors. So he really has an eye and an understanding of what projects require to take them from an exploration play to a development play, and when to bring in the majors to sort of make these deals. All these deals he's made, all these projects that he's sold accumulate $2 billion worth of value. And they're all either in construction or in production. So it's a very impressive track record, and really knows which projects have merit to move forward. So going forward, we have several catalysts, a lot of news flow we're going to have in the near term. Both projects we're developing sort of slightly staggered with updating. We have just updated our Boardwalk preliminary economic assessment earlier this month. We'll look at later on. We have a pilot plant. So with the Go2 lithium technology, we have exclusivity on that technology, but it also comes with a very large scale pilot plant, a 10,000 liter per day pilot plant. That's in Calgary now at our warehouse, and we're currently assembling that in preparation for pilot testing the brine at both Boardwalk and Park Place. And with that, we'll have, we'll go back down the well and get additional samples and really upgrade the reservoir and the resources. So location. It's always very important with any project of any resource, any mineral. Location is key. Alberta is a fantastic place to do business. It's a very resource-friendly jurisdiction, as everyone knows. It's a very energy-friendly industry. It has low risk. The government's been very proactive in recent years, making regulations and fostering this lithium industry and producing a pathway towards development and permitting. It's been taken over by the Alberta energy regulators, which means we're using, for the most part, basic oil and gas permitting and regulations. So it's a really streamlined process. You can imagine permitting a water well versus permitting an open pit. It's an order of magnitude of weeks versus months or years. I'm sorry. And of course, infrastructure. Alberta is not at 4,500 meters elevation. It's at a reasonable elevation in central Alberta. There's 4-lane divided highways. There's rail. There's gas lines, power lines. There's labor force. We're right close to Grand Prairie, not too far from Edmonton. So it's a very unique place to develop these unique deposits. So our Boardwalk project, our flagship, it's our most developed project. We have recently updated our PEA and updated our resource. 6.1 million tons lithium carbonate equivalent as a combined indicated and inferred resource at about 70 milligrams per liter. With our technology, we've been able to upgrade our recovery, which gives us 34,000 tons per year over a 20-year period. And that gives us a $3.7 billion NPV pre-tax and an EBITDA of $715 million per year. So the land package, tenure is also very important in any property. It's about 400,000 contiguous acres. It's 100% crown. There's no freehold. There's no other competition in the area. We have consolidated the entire Leduc Reef structure. There's no carbon sequestration or pore space overlaps in this particular reef. And the oil and gas production has all been shut in. So really, it's really the simplest property to package and put forward. And I always say the simplest projects get built first. So it's a really unique project in that regard. Here's some of the numbers on our PEA. Like I said, 34,000 tons lithium carbonate equivalent. This is LHM. This is lithium hydroxide per year. We used a lithium price of $26,000. We feel that's a very, even though the price has come down from an unsustainable $80,000 per ton to below $20,000, the forecast and everyone that we see shows, below 30, above 20,000, above 25,000 surely over the course of past 2028 and onward. So really the big thing that triggered this new PEA was being able to reduce our OPEX costs to $4,588 per ton sold of lithium hydroxide. That's a reduction, 34% reduction from our previous PEA, and that's due to the Go2 lithium processing design. our capex remained the same. So we decided to keep everything up front the same. The only change was the technology and, of course, the back-end technology, because we use different reagents, which produces a different eluate, a lithium sulfate versus a lithium chloride, which is not a disadvantage at all. It's actually an advantage because the equipment to process a lithium sulfate is very well understood and off-the-shelf type equipment. But of that $2.16 billion capex, it's important to understand that there's no existing infrastructure included. This is all brand new wells drilled from surface. We're self-reliant on electricity. It includes a high-efficiency cogen natural gas power plant. We chose to do that because of the Alberta grid is currently slightly unstable, and severe price spikes are occurring, as you've seen in the news potentially. And we're able to monitor our capex and opex through this, and even keep our carbon tax reduced or down to nothing because of the high efficiency, as well as being able to be in a position to capture our own CO2 emissions and sequester those permanently, which we have done with an MOU with ZS2 Technologies, who can capture the CO2 emissions straight from the plant and use that in their magnesium calcium cement boards. So a unique add-on that is not part of the PEA, but is a work in progress, and we've been piloting with them for several months now. So improved IRR to 25% pre-tax, and improved the payback period by a half a year to 3.5 years pre-tax. Of course, there's always ways to improve, or where there's always improvements we can make. So repurposing a lot of these old pieces of infrastructure, using well pads that are in the area, which are abundant. There's over 440 wells in our resource area, our indicated area for that matter. So there's abundance of infrastructure we can repurpose and use and save costs. Another one is the federal government has proposed an investment tax credit, an ITC, for capital expenditures on producing critical minerals. So that should come out in July. That'd be a massive saving for any project in Canada. The operating expenditures, we've made a great reduction, but we can continue to do that. When we go down the well in the next couple months here, we'll gather additional porosity data, which will give us, we expect a better model from that, more deliverability, which will save on the OPEX and add a bit of resource as well. And I've talked about the ZS2 Technologies here as well. So lots of opportunities still to improve these metrics. So in the development timeline here, we have our next big step is to pilot the Boardwalk brine. Like I said, the pilot has arrived in Calgary. We're putting it together. We should expect some brine going through that starting in about late March, early April. As well, we're going to go down the well and get more sample, more brine, and get more data and flow tests and all that. That'll give us an updated, measured, and indicated resource at Boardwalk. And with that pilot data and resource data, that'll give us what we need for a pre-feasibility study. Our second flagship project, a little bit less developed. It took us a bit longer to consolidate the Leduc Reef here. It consists of 1.4 million acres. It's a much larger project. Again, it is all crown land. There's no freehold. There's very, very little CO2 overlap. And our initial sampling has shown 77 milligrams per liter. Historically, a lot of samples up to 130 milligrams per liter. We expect to be in the wells getting additional samples in the next few months as we continue our sampling program. And on this project, we've partnered with Schlumberger, or SLB, who has been doing our subsurface modeling across the entire claim package. So we'll have a very robust model where we've been able to acquire some 3D seismic and several 2D seismic lines, as well as using, I think there's 400 drill holes that we are using data from to really get a robust porosity and subsurface model. So with that and our samples, we'll be able to put together a resource estimate, which we expect in a couple of months. And of course, we'll be able to pilot that brine and follow the same development timeline as Boardwalk. but slightly delayed because it's a little bit behind in the development. So as we've been working hard over the last couple of years, really started in 2019 with consolidation of assets, but you can see we've been checking a lot of boxes of the de-risking and adding value to these assets as we go. And next steps are piloting resource estimation, like I've said. So kind of a different way of looking at it. We also have a portfolio in Saskatchewan. Saskatchewan has a different geology, but similar aged rocks. They're both Devonian. We had a deal with a company called Pristine, which we've since broke that deal, as we have been offered a non-refundable deposit from another company to purchase one or all of our Saskatchewan assets, and that has a timeline of March 31st. So you can see the value of these assets are already starting to be realized. When you look at Arizona Lithium, they purchased Prairie Lithium project, which is adjacent to our South project, for $195 per acre. So you can see these unconventional brines, the value is starting to be realized, and we continue to add value to these. So if you haven't seen what a DLE project looks like, it's going to look a lot like a oil and gas type gas plant. We're going to drill wells. We're going to use ESP, electrical submersible pumps, to pump up the brine. It's going to go through a pre-treatment. Another thing I should mention with working with Hatch on any sort of feasibility or PEA study, very conservative on everything. We have measures for pre-treatment. We have measures for all sorts of things that, unless there's data to prove otherwise, you have to account for it. So we have a robust pre-treatment in our technical model. Following the pre-treatment, it goes to the DLE facility. That DLE works in roughly 60 minutes. We are able to acquire 98% of the lithium from the brine in that 60 minutes period, and then the spent brine then goes down and back into formation. So you're not handling with large volumes of water at surface. And our technology is able to bring the concentrate up to over 3,000 milligrams per liter. So our back end, when you get to number 5, is a very low volume of brine and a lot cheaper to process because of the high concentration of it and high purity of it. And then 6, of course, makes a battery grade product, a lithium hydroxide battery grade product. So our DLE technology, it is an ion exchange technology system. It uses a continuous ion exchange process. So we call it a continuous DLE process. It is unique to GoTo Lithium, as it, it's when you talk about ion exchange, everyone talks about the media and the media being very important. And yes, of course, it is extremely important, a large part of the ion exchange process. But it's also how you use it. It's also how you are able to maximize the effects of that sorbent or media to your advantage and really excel the recovery of the lithium. And GoTo Lithium has really mastered that process. So GoTo Lithium is actually a 50-50 joint venture between Computational Geosciences, which, if you know Robert Friedland and Ivanhoe Mining and Ivanhoe Electric, it's his R&D arm of R&D subsidiary of Ivanhoe. And the other part of the joint venture is Cleantech. They're an Australian public company. They are a water processing company. They work with tailings waters for cleaning. They do ion exchange. They've been doing ion exchange for over 25 years in cobalt, in uranium, in copper, and they've been very successful. They've gone from lab to pilot to commercial operation, and this is one of their commercial operations. So we have an exclusive license with GoTo Lithium in Alberta and Saskatchewan. And with this deal we made with them, it's a share-based deal based on milestones, and it gives us a pilot plant for up to 18 months to test our brine and to really get that feasibility level quality of data and proof of concept of the process. So here's what it looks like before it was shipped. There's a few pieces missing. It's got a platform around it, but we did a lot of test work with Hatch as our third party and months of testing in lab. Now the pilot's been shipped in November. It's now arrived this January, and it's currently being commissioned, and we'll be testing throughout the year. So here's our value creation curve. You can see our main competitors here a bit ahead of us as they've been around a bit longer and then done a bit more work than us, of course. Standard being the ones down in Arkansas who are in early stages of commercial production on their initial, I think, 5,000 ton per year project. So they're showing proof of concept with that. And E3 has piloted last summer. And so we expect to follow that creation curve and add substantial value to our shareholders. And our shareholders benefit from a very strong cap table. Shares are held very tightly. We only have 50 million shares outstanding. 35% of those shares are held by insiders, friends, family. So our shareholders and our board and management are all aligned and really have a desire to use our capital very efficiently and not continue not to go back out to the market and raise funds if we don't need to. So again, people we engage with, Schlumberger, very excellent group to be working with. They have so much depth of expertise, as does Hatch. Experts in every sort of level. ZS2 Technologies, a very smart group out of Calgary, developing a cement board and using brine to extract magnesium and castellum from the LithiumBank brine, from the Boardwalk brine, and we've been piloting with them. And a very, very big group. And Go-To Lithium, of course, very switched on. Our management team, Paul and Rob steering the ship. Talked about Paul and Rob and their ability to recognize projects of merit and do what's necessary to develop them to a point where it makes sense for a larger company to take it over and ultimately develop it and create value for shareholders of LithiumBank and create value for the company going forward. And the rest of our management team, I'm sort of past 20 minutes, so everyone very skilled and very accomplished in their respective fields. A very impressive team we have, and like I said, we're all very aligned in how we see LithiumBank being developed. So with that, I will turn it over to Q&A if anyone has questions. So there's a question about going down existing boreholes for extraction. This is something that we expect we'll be able to do. There are hundreds of wells in the area that are penetrated into the Leduc. It'll take a bit of time to determine the quality of these wells, which is why we haven't included them in our preliminary studies. So as we go and we spend some time looking at these wells, we'll be able to determine which ones are suitable for reentry and for either disposal or production going forward. And that will certainly have a positive effect on our economics. It's a question about electric vehicles and if they fall out of favor, how much headwinds would you have? Well, it's a good question. Electric vehicles, there's a lot in the news about them losing steam, but they are still year over year increasing in sales. As we go forward, Canada's a small market, but the adoption in other areas, in certainly in the United States, in Europe, all these places are going to need a significant amount of lithium, and that uptake continues to increase. So the demand for lithium, we foresee that as this sort of low lithium price as a short-term headwind, and we're looking onto the brighter future. There's a question about how much does our pilot unit cost. You can find that in our news release. It's a share-based pilot licensing fee. So we've paid 4 million shares on acceptance of the agreement. Additional 3 million shares once the pilot is operational, and which we've deemed as 100 straight hours of operation with success. That would trigger another 3 million shares. There's an additional 3 million shares upon completion of a pre-feasibility study, and another 4 million shares upon licensing it and going forward with operations. So there's a question: can you explain the benefits of DLE technology for a non-geologist or non-engineer, for that matter? The DLE technology. So the other only comparison with brine would be salars in South America. They're much higher grade, and traditionally they use evaporation ponds. You know, that picture where there's just hundreds and hundreds of square meters of these evaporation ponds that they pump water into and then let the sun do the work. That takes about 18 months to 24 months to evaporate that water, to come up with a concentrate, and then process that concentrate, and you still have to remove all those impurities. The other downfall of the salars is the recovery is quite low. You're looking at about 50-60% recovery of lithium from all that work. And so with the DLE, it really unlocks these unconventional type brines. So these brines are certainly lower grade than the salars you find in South America. And so you can't do an evaporation pond in a place like northern Alberta. You know, you have, certainly the temperatures don't allow it, but it's just the water volumes would be too high. So the DLE works very fast. Ion exchange is a very old technology where it has a chemical reaction and it absorbs the lithium into the media, and it acts very quickly. So within 60 minutes, we can extract 98% of the lithium. So the beads and the brine kind of cross over each other, and with this continued DLE, it's really neat because each step of the way there's less and less lithium, and then there's cleaner and cleaner media, and you really attract all that lithium out of the brine. And so it's a very rapid chemical reaction. And then you have our technology gives us a over 3 grams of lithium per milligram, which is a very high concentrate, higher than we've seen kind of out there. And so that allows us to work with very small volumes going forward. Let's see if there's any more questions. If I got to scroll through here. There's a question about if I'm able to talk about the Saskatchewan assets. I can't say too much more about the Saskatchewan assets at the moment, other than there's a non-refundable deposit for $8 million. We will find out more, and we'll let the market know about what happens with additional or with the purchase or sale of any of the assets. The company does have until March 31st to make those decisions. So it's kind of a hold tight on the Saskatchewan assets. And I think that's good for now. So I'll leave it there. Thank you everyone for tuning in.